Welcome to Economics. The government went all out to stimulate the economy ahead of the Navratri Diwali festival season, with the lower GST kicking in bang on the first day of Navratri. Did the stimulus work? First cut anecdotal data is as follows. Tata Motors said its sales in the 2025 festival season jumped by 33% to 1 lakh cars. Auto registration data, this one compiled by brokerage Nuvama, shows the two-wheeler sales grew 20% from Navratri to Diwali over previous year. Car sales grew 17% and LCVs grew by 23%. Electronics goods data compiler Counterpoint says smartphone sales grew 10% by volume and 18% by value. Vijay Sales told CNBC it saw 20% growth in consumer goods durables sales this year versus a growth of 10% in the last festive season. And finally, brokerage sources, various brokerage sources tell us that the top e-commerce sites, JioMart, BigBasket, Blinkit and Zepto saw 65% to a 200% growth in average daily users. Now, to give us their respective experience and data, I have with me Mr. B.C. Bhartia of CAIT, or the Confederation of All India Traders. That is the brick-and-mortar traders. What I gave you was the app data. I also have Tarun Pathak of data aggregator company Counterpoint. I also have two economists, Abhishek Upadhyay of ICICI-Securities and Madhavi Arora of Emkay Global, to give us the top-down picture. Well, gentlemen and Madhavi, thank you very much indeed for your time. We were given to understand that electronic gadgets did very well. So, Tarun, I start with you. What numbers have you all been able to accumulate? How were the Navratri to Diwali sales compared to last year?
Thank you, Latha. So yes, very positive indicators. So the numbers are coming in, and I think we'll be coming up with the final set of numbers last week. But the early trends are indicating a very strong festive season this year, to a certain point that we are seeing a smartphone growth on volume 10% year on year, and by value even higher at 18%. So these are very positive numbers that are coming. In fact, the highest since 2020, when we have this COVID pent-up demand in 2020 festive season. And after that, this is the highest ever we have seen in a single festive season in the 5 years.
Okay. Any further data you can share on, say, specific consumer durables, non-cell phone, non-smartphone data?
Yes, we are seeing a very strong growth on TVs. In fact, 32-inch and above are growing in double digits year on year. We are seeing a very strong year on year across different consumer electronics, especially on laptops as well. In fact, the wearables also grew year on year. So overall, the positive sentiment, and this is coming across channel. It's not just the mainline versus online kind of split, but we are seeing this positive sentiments coming across different channels throughout India.
Okay. Well, let me come to the FMCG sales, the Kirana store sales. Mr. Bhartia, thank you very much for your time. Your press release very strongly said that if we thought e-commerce is taking away, or quick commerce is taking away market, that's not the case. You actually saw the reassertion of brick and mortar, sales. Can you give us some numbers first?
As per our research work, this Diwali, we can say, was a golden Diwali. In goods sector, we estimate sales 5.40 lakh crore, and in service sector we estimate 65,000 crore rupees. This is a big number, and it is showing that consumers are coming back to market. We saw a lot of rush in all the market area. We call it as a golden Diwali. In addition to this, we did a friendship Diwali. You see, across board, we saw good sales right from rural area, right to BMW. Everywhere we saw good number of sales. This is backed by increase of reduction GST.
Okay. Now, Mr. Bhartia, 1 minute. Your 5.4 lakh crore is very impressive. But can you tell us what was the rate of growth? I mean, last Diwali mein year on year aapka kitna tha? And this year on year, what was the rate of growth? Was it 20, 25, 15?
last Diwali, we estimated 4 to 5 lakh crores. This we see jump of about 25%,
Okay.
and the jump is in all sectors. As shown by you in your screen, you can see increase in all the sectors across the board.
Okay.
In addition to this, increase
Okay.
to the in starters
Got it. We have a problem with your audio, sir. We will fix it. But if you can bring out that table which Kate put out on textiles, apparel, sweets, namkeens. I must have contributed a great deal for sweets, namkeens for sure, and textiles in a very, very big way. Not sure of the others. Well, let me come to Madhavi now. Madhavi, you have a cohort of colleagues who are tracking individual companies and sectors. What is the macro picture you are getting? Are they telling you that this is a far better sale than previous years? Just some comparisons.
So hi, Latha. I think there's been a very mixed trend across sectors if I look at the consumer behavior. Clearly, auto segment has been the biggest beneficiary of that. We've seen improvement across segments, be it a smaller segment of, say, of Maruti or Hero Motors to the high-end premium cars as well. So that segment has actually seen across the board gains. But I think, beyond that, I'm not very sure whether I can really assume that this is basically a structural change per se, because see, last year the base effect was very different from what you have this year. Last year, Navratris were largely in September, and Diwali also was a little early. So this year, the base effect also played out very well for certain companies in terms of their numbers. But beyond that, I'm not sure the discretionary space is actually showing across the board the same kind of enthusiasm. Clearly, as we were discussing, staples, for example, there's a lot of chaos in the near term because of GST like changes. Multiple MRP products are right now in the system. Distribution system and value chains are yet to be aligned. So we don't really know whether there's actually been an improvement in the staples consumption pattern. Of course, there's modern trade, which is also doing a lot of structural changes in the sector itself. Of course, QC has been over the roof. Fashion retail has done very, very well. And these segments, again, are actually, they were already doing very well pre-GST compared to other segments. Definitely, there's been some uptick in these segments, but I would still wait to understand whether this is, there is actually a trend beyond the festive excitement and the GST-led postponement of purchases that have played out in the recent 2 or 3 weeks.
Yeah, that is why when we were presenting the auto data, and that will come up for you, the auto sales guys, Nuvama, for instance, gave us 2 sets of data. One, from Ganesh Chaturthi to Diwali, and another from Dussehra to Diwali. And clearly, the Dussehra to Diwali sales is brilliant. It's gone through the roof, indicating that some slack, which was not, purchases not made from August 15th to 22nd because people were awaiting the lower GST, and that got made up. So that clearly indicates that August to October is not very spectacular. It's flat, sometimes even negative. But, the September to October has been brilliant. Abhishek, I know you track, as a heat map, a lot of things. The rural incomes, for instance, have clearly remained higher. So it's not just the GST cut. It looks like the very good harvest and very low prices has also meant real incomes, especially in rural areas, remains very good. Can you, as an economist, take away a feeling that maybe GDP numbers have to be revised higher?
Latha, some of the data you mentioned on auto sales particularly is quite striking. That said, also it adds to the mixed but generally resilient data that you're seeing for Q2 otherwise also. So GST collections had started to pick up even before this demand surge happened. Also on the export side, we saw while exports to US were down 13%, overall exports held up well. So that augurs well for growth also. But I would be careful, like you alluded to also, in extrapolating this festive season demand-rated numbers going forward for various reasons. One, of course, big ticket consumer goods demand is easy to postpone as well as prepone, and number of tailwinds likely came together to prop up these numbers. So I'll wait whether this is a trend shift in demand or not. Second, I would rather prefer to look at how mass consumer items whether the price cut from GST is being transmitted there and how demand is evolving there, because those are items for recurrent consumption and could lead to recurrent increase in or a more persistent increase in consumer disposable income. I will wait for more color on that front. Third, what we don't know from these numbers is what is happening to the services demand side. So on that front, we know one big segment is real estate services, and the news flow there has been more mixed compared to the demand for goods that we have been discussing here. And finally, for me, from growth outlook standpoint, the big elephant in the room is really when high US tariffs are going to come down. So while news flow is positive, still not clear when that will happen. So I'll wait for that also. Okay. So not changing our growth numbers for now, but bias is to upgrade them once we get the Q2 numbers.
Okay, so you've answered the question I was going to ask you. Even if you have not upgraded the numbers, there is an upward bias to your numbers, is what you're saying.
Yes, so Q2 could be tracking maybe above 7%. We don't have government spending numbers yet for September, but could be tracking above 7%. So that would mean first half growth is closer to 7.5%. If these tariffs come down quickly, then second half growth could be 6.5 to 7% rather than 6 to 6.5.
Okay.
So inclination is to revise the numbers towards 7% from current 6.7% we have, but we wait for more data.
Okay, Mr. Bhartia, actually when I spoke to a lot of people who are not willing to come on air because, their results are not yet announced or whatever, they have no media policy. The retail store guys said that the first 6 months of the year, it was thanda. People weren't coming. Although there was a big income tax cut, which put 1 trillion rupees in our hands, one didn't see the impact. But there was something about the festive season and the GST cut that it triggered a flood of footfalls. Is that your experience as well? That the first 6 months were thanda, but some magic has definitely worked in the month of October. Mr. Bhartia.
Yeah, the consumers spend linked to future. If feel that future is bright, they come out.
I don't think we're not able to understand you, sir. There is an audio which we have to set right. Maybe we will put you on phone in a minute. Tarun, is that a feeling at all? That things were very quiet in the first 6 months and there was something magical post-October, a spring in the step. Did anyone tell you that? Do the numbers tell you that?
Yes, definitely. I think I fully agree to that. So when we do our consumer retail audits, especially on the electronics, we were seeing almost a single-digit decline in the first half in terms of consumer footfall, and most of the retailers were saying the same. But as we move into the second half of the year, there was positive sentiments that started somewhere late July and early August with the Independence Day sales and everything. And then the GST cuts happened. Everything was waiting for this festive season. So there was surely a pent-up demand. But the clear thing is retailers, the collective feedback, what we are getting from the ground is not even there was more footfall, but also the incremental spending on electronics that has happened this year.
Okay.
So overall, that was a very positive for them, because compared to the last year, things were a little bit down and mainline were really struggling in terms of the offers and getting consumers into their stores and everything. So that started coming up, and that was a real positive decision in terms of electronics, especially smartphones.
Okay, that's good to hear. And as you gave a very big number, since 2020, when of course there was a burst of buying, we have not seen such a rate of growth. That is a very telling number. Madhavi, your cohorts, your colleagues, are any of them revising their earnings upward? And more specifically, the question like I asked Abhishek, are you in the front foot to have an upward revision of your GDP numbers? So both corporate earnings, are your colleagues doing anything, and your own macro number?
Yeah, so there's been clearly a shift towards some bias towards upgradation, but I don't think across the board they are doing it. As I said, auto sector has been the biggest beneficiary. Clearly, there's a case for revision on the upside. But I think for staples, they are still waiting and watching. As I said, there's a lot which is happening structurally as well as in terms of their value chain becoming much more synchronized. So I think they would wait at this point in time. In discretionary also, there's been a very mixed trend. I'm not finding excessive excitements in my analysts' view in terms of them really upgrading their thought process or their earnings at this point in time. But overall, of course, some sectors like auto, which are heavy sectors in terms of their market positioning, definitely would lead to overall upgradation in earnings for this for the Nifty. But that said, for the growth aspect, I agree with Abhishek. We would still wait and watch and understand how much is the trend coming out of this noise for us to really ascertain that consumerism actually making a massive more delayed retail therapy that we are seeing at this point in time. I'm not very sure whether the income effect has actually become so positive that we are going to be seeing this continue beyond the October-December period. There's also a base effect which is going to play out positively for October and the delayed purchases. So, of course, second quarter GDP, which will have a deflator effect, plus the third quarter, which will have the sequential gain, would augur very well for us. So maybe we will be seeing probably GDP growth actually coming out much higher than 6.5% that we are estimating for the year. But I'm still not sure whether we are in for a V-shaped recovery in India or whether it's going to be a U-shaped recovery. But one thing is for sure that consumerism, which was actually downtrending from the urban sector point of view, has at least found its trough, and it's now going to be gradually going up if things continue.
You guys have given me the big takeaway that I was looking for. That, when you enter the festival season, you did not expect the kind of bump up. Now, how much it will be is the next question I'm going to ask you after the break. How much of this can sustain? Or is this a one-time burst? That question will be after the break. Bazaar viewers, you will get to hear the whole show after market hours. For you, it will be time for Chartbusters.